All right, the recording is starting soon. Now, I know we have people here. I can't see the screen right now, guys, so because I'm looking at the presentation right now. So I won't be able to look at the chat just yet, but Arpita, just shout out to me if you see something in the chat.
Sure.
That I need to urgently reply to. Thank you. I appreciate it, Arpita. Okay, so guys, let's get started. I'm going to give you an introduction to crypto and decentralized finance. And it's geared towards absolute beginners. And I know we have people from varying levels of experience here. Some of you guys really are starting from day one. You don't really know anything about how to buy crypto, how to store crypto. And then we have some people who've been in for multiple years and have lots of experience. And we're just going to gear this towards the newbies. And of course, later on, we will have a nice chat with those people, perhaps who have lots of experience, would like to share as well. Okay, I just want to start by telling you, the crypto market is very different from markets you may be familiar with. Trading it can be really dangerous. The best practice, generally what I've found over time, is to buy when there are dips over time and hodl, hold on for dear life. So there's a saying we have, time in the market is better than timing the market. Hodl, don't trade. The only people who should try to trade this market are experienced traders, because otherwise you will get wrecked, okay? So what I do and what I have done for the last 3 years is dollar cost average in. Every time I would get a paycheck, what I didn't need for my bills, what that bit that was extra, I would dollar cost average into those projects that I've researched that I believe have fundamental value to be important to our future financial system, where we're heading into the new financial system. And that's why I wanted to invite you all, because we are going this direction. We're transitioning out of the legacy financial system into the new financial system. And those people who are early are really going to benefit, because we're going to be seeing a huge transfer of wealth like we haven't seen in our lifetimes, and we probably won't see again. And there's a lot more to it than that, though. It's not just about transfer of wealth and making money. It's not about getting rich quick. And that's why I say time in the market is better than timing the market. When you get in, you need to be prepared to be in for 3 to 4 years at least, right? Because this is, we're new. Even though you think we're not, we are new. This is the future financial system. Only last year did it become legal for banks to custody crypto. And now the banks are getting on board. Bank of New York Mellon is now getting on board with crypto. This is one of the oldest banks in America. So we're starting to see this transition away from the legacy financial system that was built in the 70s, where SWIFT was the network for transacting and sending value. It's from the 1970s, and it's slow, and it's expensive, and it's unfair. And now unfair in terms of who benefits, because it's centralized. And what we're moving into now is a more fair advancement in technology that we have. And I'm just going to move on from here, and I'll expand on it more. Okay, so I want to talk first about the problem that gave rise to Bitcoin. There was a problem, and with the invention of Bitcoin, a solution was provided. So inflation and debt, like our national debt, if you look at the national debt clock, we'll never be able to get out of this debt unless we hyperinflate our way out of this debt, which is the plan, right? So that means your purchasing power, when stored in fiat currencies like USD, Euro, British pound, it's just being siphoned away if you're keeping money in a savings account in the bank. So I've just written here, inflation, debt, and the decline of fiat currencies and the legacy financial system. Cryptocurrencies in the new financial system give us an alternative where we're not dependent on the decisions of governments and politicians, because these cryptocurrencies are not, well, with the exception of the central bank currencies that are coming soon, because there will be a US digital dollar, but these are decentralized. So they're not controlled by any one group, and that's what makes them fair, more fair. And the reason we need to be more fair is because globally, 31% of adults are unbanked with no access to the economy. That's extremely unfair. They have no chance where they live. It's completely unfair. And now they can be their own bank, because if you don't have an address or for any reason, a bank can choose not to give you a bank account, right? So it is completely unfair. But now anyone with a smartphone, can download a wallet, and they can be their own bank. Okay. The other thing I want to talk about, the problem is censorship and seizure of assets, like a Cyprus-style bail-in that we saw a few years back. Those of you in Greece and in Europe will remember this, when people with savings in Cyprus banks with over a certain amount had to take, they took 1% off the top to bail the bank out. Your deposits in the bank were taken by the bank, and that is legal. That can happen anywhere, okay? So when you are your own bank and hold your own private keys, no one can confiscate your wealth. Having said that, I do want to let you know that when you buy crypto on an exchange, because of anti-money laundering laws, we have to do a KYC process, know your customer. So when you first join an exchange, you have to prove your identity with a picture of your identification. And this is how, we make sure that, money launderers and criminals and terrorists are not running rampant. In fact, most criminals actually use cash, the USD, for transactions, not crypto, because crypto can be tracked. You would have to be a pretty stupid criminal to use crypto. And I want to talk about sound money now. You see this chart here on the side. These are the characteristics that make up sound money. Now, here it says USD fiat, but that applies to all fiat currencies, Euro, Great British Pound, the same applies. So these characteristics that make up good money is it fungible? Is one unit of a currency exactly the same as another unit of this currency? Gold does really well with that, and the US dollar does really well with that. Bitcoin, not so much yet, but they are working on an upgrade to make it more fungible. And why I say not so much yet is because it can be tracked. If the history of those transactions that you're sending, the fractions of a Bitcoin you send, it's a UTXO blockchain, unspent transaction output. It's the first generation of blockchains. So you can look at the history of everything. Someone who knows how to investigate what's happened on the blockchain can. So it's not exactly fungible, meaning you could have some tainted coins if they were used in a crime. These coins could be blocked from transacting in an exchange, because let's say they are the bounty of a hacker, and we have blocked those. We know that they're dodgy, and we can block it off. So it's not yet fungible. Okay, the next characteristic is it cannot be counterfeited. Okay, Bitcoin it does the best with that. And when I say Bitcoin, I'm talking about all the cryptos, Ethereum as well. It cannot be counterfeited. Okay, fiat, we know USD and fiat currencies can be counterfeited. Gold can too. There are fake bars of gold being sold that are filled with tungsten because it has the same properties as gold. It's the same weight. And so that's why if you do buy gold, buy coins from like US Eagles or Canadian Maple Leafs or something like that from a national mint. Not only are they easier to resell, they aren't the ones that are being counterfeited, okay? I do like gold. I think gold is a great asset in everyone's portfolio, but it serves a different purpose than crypto. I believe crypto is for higher yields because it's the technology of the future. It's like getting in on the early days of the internet is what we're talking about here. Gold, I treat it more like a savings account, okay? And the next characteristic is it portable? Well, you can't really, you can't really fly to Europe with all of your wealth in gold because it's too heavy, right? Or it will be confiscated in the airport. And then USD, US fiat, yeah, it's kind of portable. Bitcoin is extremely portable because it's on your money's on the blockchain. You're not physically in possession of it, so wherever you are, you can access it. And the next characteristic is it divisible? Gold is not that divisible. I mean, in the olden days when gold was used as money, they would have a coin and they would take little pieces off of the coins, which is why when you see these antique coins, sometimes they have little pieces out of it. But it's a pain. I mean, who wants to do that, right? Yeah, USD's divisible. We have our dollars and we have our quarters and nickels and dimes. And Bitcoin is also divisible, which is great news because you don't have to buy a whole Bitcoin. You can buy fractions, right? And that goes for all of the cryptos with the exception of NEO, but don't buy NEO. Okay, and then the next characteristic is it durable? Can it take a beating? Gold is very durable. US fiat currency, paper money is not durable. Bitcoin is very durable. The next characteristic is it widely accepted? Does it have a history of acceptance? Gold and fiat do. Bitcoin, we're getting there. We're getting there in time. It's, we're still early, which is good for us because if we weren't and it was widely accepted, the opportunity wouldn't be there anymore. All right, the next one, is it limited in quantity? Is it scarce? Scarcity is an important characteristic of money. Scarcity is what gives it value. Gold is somewhat scarce. You have to get out there and mine it, but there are huge reserves under the ground that can be mined. So, but it is scarce, and it takes money to mine it. So that gives it value. USD is not scarce, guys. I mean, look at what's happening there. The stimulus that, of course, people need, but they are just printing money right and left. And that's what's going to be causing the inflation. So USD is not scarce, which is why, and that goes for euro and pound as well. All fiat currencies are not scarce, and that's why it's not a good idea to keep a lot of wealth in the bank in a fiat currency because it's just devaluing over time. And we're going to see that speeding up as well in the economy that we're going into. All right, and then Bitcoin, it is the scarcest asset. Crypto is the scarcest asset you can get. There will only ever be 21 million that's in the code. They are mined. It's a proof of work blockchain, which I'll get into a little bit later, but it's through mining that new Bitcoin Bitcoin and some other cryptos are created. They come into existence through mining, which is, I'm mining Ethereum on this computer over here. It's a gaming computer. So I am running mining software that's creating new Ethereum. So that's, but they're limited in supply, okay? So it's extremely scarce. Now, the good thing that blockchain gives us beyond the financial system, it has many other uses, but it is a truth machine, okay? When Bitcoin was invented, the big breakthrough there was digital scarcity was introduced. Digital scarcity because nodes running all around the world have to agree. And if some node comes up, a computer like this one, okay, and let's say I'm a hacker and I try to fake a transaction or something, all of the thousands, hundreds of thousands of other nodes around the world will reject it and I won't be able to get away with it. So it is unhackable. It is immutable. What happens on the blockchain is agreed upon by the other hundreds of thousands of nodes all over the world, that hold together, share that record of truth, right? And that is why not only is it used for currency and money, there are many other applications like VeChain, for example, one of my favorite cryptos that just went on a great run yesterday, up 40%. It is used for supply chain tracking. Walmart in China are already using it. The code is VET, by the way, VeChain. You can get it on Binance. So, and also there are other blockchain companies working on things like voting, and tracking how our tax money is spent. So this is where we're moving in the future, because it is the way that we can prevent all of the fraud that exists in the world today, because everything is immutable on the blockchain forever. So, and it can't be faked. So any kind of fraud that exists, financial fraud, or let's say politicians spending tax money in a place they shouldn't, or anything, it can all be prevented with the blockchain. So it is the truth machine, okay? It's really, not only is it a way for us to make money, it leads us to a more fair, honest future, okay?
Alana, we do have a question. So when you say, so the question is, when you say Bitcoin is fungible, do you mean all crypto or just Bitcoin?
Good question. Well, they're not all fungible, okay? Not yet. Because you can tell, like Ethereum is more fungible than Bitcoin, for example. Bitcoin is a UTXO blockchain, but because there are privacy coins, right? So we have privacy coins which are truly fungible, okay? Because then you can't see the history of where has that coin been from your wallet to your wallet to your wallet to my wallet, and you can't track it, right? However, I do feel like we're going to have regulatory problems, so I don't advise anyone investing in the privacy coins. Maybe have some, maybe just have some, because you never know what's going to happen in the world. And you want to be prepared, so hold some. This computer back here that's mining Ethereum is also mining Monero, which is one of the biggest privacy coins. I have not bought really any privacy coins except a little bit of Zcash, but I do mine it and I do hold it, because you never know. It's not a bad idea to hold a privacy coin, but I wouldn't invest in it just because I can see that authorities might have a problem with it and they might crack down on those. But right now it's not fungible. There's a technology called Wimble that is being introduced on Litecoin, which is the testnet for, and if it goes well through these experiments, then it will probably in the future, not anytime soon, be also applied to Bitcoin, which will make it more fungible. But this is where we are today in the advancement in the space. Thank you, Arpita, and to the person who asked that question. All right, so this is the world we live in today, the legacy world. I hope, can you guys see my mouse? So we're having to agree with human beings and trust centralized parties. We have to trust in our current financial system. I have to trust that if I put money in the bank, that I can get the money out of the bank. I have to trust, like if I was using, like I was telling you, Arpita, yesterday, the app Robinhood, if I'm trading stocks on that app, or if I buy Bitcoin on that app, I have to trust they're not going to go out of business. And, first of all, I don't recommend ever buying Bitcoin on Robinhood because you can't withdraw your coins. It's just a paper derivative of Bitcoin is what's being traded there. So this is the world we live in today, where we're relying on trust, and we're moving into this blockchain where we don't have to trust anybody because we have a truth machine. You see all of these nodes are in this picture are just representing different blockchain nodes, and the consensus is happening through the blockchain. So that's just a little graphic I wanted to show you about that. And now I want to talk about the ways in which a blockchain achieves trustless consensus. So the original blockchain, Bitcoin, the granddaddy we call him, is a proof of work blockchain, and it achieves trustless consensus through minings. through mining. So lots of people all over the world and businesses. You have huge businesses and banks now that are all mining Bitcoin. Just like this computer back here, it's not mining Bitcoin because it's not the right kind of computer, but there are people who have these ASIC miners and they are mining Bitcoin. So it's a necessary part of adding the new blocks to the blockchain. So you have a block full of transactions, and a consensus has to happen to all of these nodes around the world have to agree that on these transactions, and then the first computer that solves the mathematical puzzle, okay? So that's what mining is. It's basically having to solve a mathematical puzzle and give the right answer. And then that node, that computer that does that gets rewarded with the new Bitcoin, right? So that's how they're making money, the miners. And they get to add that block to the blockchain, right? So blocks are summoned to life by miners, the players in the ecosystem who execute proof of work. A new block is accepted by the network each time a miner comes up with a new winning proof of work, which happens roughly every 10 minutes. So it does take roughly 10 minutes for a new block to be added to the blockchain. So that's why when you send a Bitcoin transaction, it takes about 10 minutes. Now we have a newer trustless consensus mechanism, which is the one that Ethereum is now moving to today. Ethereum 1.0 is still mining, but Ethereum 2.0 is in progress right now. It's probably going to take another couple of years for it to be completely finished. And it is moving to proof of stake. So Ethereum is actually moving away from proof of work to proof of stake. Ethereum is the number 2 blockchain. So if Bitcoin is the king, Ethereum's the queen, all right? So what proof of stake, it's a different kind of consensus mechanism. Blockchains use it to agree upon a single true record of data history, the same way that it works with Bitcoin. However, in proof of work, miners spend energy, electricity to run these computers and process these very, very, very difficult mathematical problems and come up with the answer and get rewarded. So it spends a lot of electricity, right? And with proof of stake, we don't have to use electricity, okay? So it's better, for the environment, it's less expensive. In proof of stake, what we do, because I'm also got a proof of stake node on here for the data blockchain. I'm running a Guardian node. And so in the proof of stake, what you do is you commit a stake to validate the blocks into existence. Okay, so I commit by locking up some of my coins on my node. So we're committing value. And if I try, then as a hacker, I go and try to fake something and do something I shouldn't do, then I can be, what's the word I'm looking for? Yeah, they can, I'll be punished a little bit for it with losing some money. So there's a financial incentive, to be honest, right? So that's how proof of stake works. And I put a link here just so you guys know. At the end, I'm going to save this as a PDF and distribute it to everyone so you all have the links that you need to do your own reading. Now I want to talk a little bit about the progression. For those of you who know me a long time, some of you don't know me, but most of you do. I started in the beginning of the internet. I worked for the first internet it was an ISP in New York City when there were only 2. There was Mindbox in New York and The Well in California. And I was a developer building early software before even Netscape. So I was there for the introduction of the web and I loved it. And I've been working in the internet ever since for 30 years, okay? So the very first web that we had was just read-only web. It was just static text and pictures on web pages, and I know you guys can remember that. And then we moved on to Web 2.0, which was social web and user-generated content, and that's where we are. That's where we are with like Facebook and YouTube and the Web 2.0 that most of you are familiar with. But what we're moving into now is Web 3.0. This is the internet of value, okay? So we can now transact value over the internet, okay? And so this was introduced with the birth of Bitcoin. And it's when Bitcoin solved that digital scarcity problem using these consensus mechanisms, proof of work, right? And now we have proof of stake. And it ushered in the financial system of the future, which is the decentralized financial system. Now, I think I probably gave you all a link to sign up to Coinbase for the ones who aren't already, aren't already on an exchange. It's really the easiest one for new people just to dip their toes in and get started. And so I just wanted to highlight some really great projects that you can buy easily on Coinbase. You can just install the app on your phone and buy these projects on Coinbase. And I want to tell you a little bit about what each one of them do. Now, Ethereum, this is where my majority of my investment has gone into Ethereum by far, because it's, to me, a no-brainer. It is a sure thing. In fact, Chainlink could not exist without Ethereum, and the graph could not exist without Ethereum, because these are projects that run on the Ethereum ecosystem. So Ethereum is the leading blockchain with thousands of decentralized applications and the home of decentralized finance as it is today. We do have some other blockchains coming up. I think probably by the next bull market cycle in a couple of years, we'll also be having decentralized finance on those blockchains. But for now, for this year, for this bull market, it's Ethereum. The next project is Chainlink. You can get this one on Coinbase as well. And it is a decentralized Oracle network, which provides reliable tamper-proof inputs and outputs to smart contracts on any blockchain. So think of it like on the network, the blockchain network, in order for a smart contract, let's say the smart contract is a lending, I'm doing DeFi lending, and I'm borrowing, and I'm committing some funds that other people can borrow out. How do I make sure that they pay me back, right? Well, those borrowers have to put up collateral. It's locked into a smart contract, okay, that runs on Ethereum. And let's say some outside data has to happen in order for it to settle, like the price of Chainlink has to reach $50. Chainlink as an oracle it's like a window. It can provide a window to the outside world, outside of the blockchain, to get external data in so that those smart contracts can evaluate and make a decision on that data. It's the number one, there are other oracles out there, but Chainlink is the number one trusted one. It's the leader in Oracle solutions, which is...
We have a question, Alana.
Yes, go ahead.
So they're asking, are you investing in pools, liquidity pools, basically?
No, I'm currently not, but we can get to the liquidity pools later. We'll get to that when we start talking about decentralized finance. Right now, I'm just talking about coins and projects, but we will talk about liquidity pools. So the next one is the blockchain, the project that you can get on Coinbase is Stellar. And this is for cross-border payments, remittances and stuff, for sending money to other countries and then having it settle in their fiat currency. So you can create, send, trade digital representations of currencies like US dollar, Great British pound. It's designed so that all the world's financial systems can work together on a single network. IBM is heavily involved with Stellar as well. So this is a good one that it's still pretty cheap. You can get it on Coinbase. And the next one is another project that's on the Ethereum network, and it is extremely important. Those of you who are technical and work in IT are going to understand this. It's an indexing protocol for querying networks like Ethereum and IPFS. So anyone can build and publish open APIs called subgraphs, making the data easily accessible. So you can imagine the performance problem if you don't have an indexing mechanism so that you can decentralize applications, dApps. Maybe I have a DeFi app that I'm creating to allow people to take part in a liquidity pool, let's say. And I've created a liquidity pool. A friend of mine has created one on the that Facebook group that I invited you guys to. He's a blockchain developer. He's one of the founders of Blockchain Foundry, which is one of Canada's #3 largest. Actually, it's on the stock market. It's not a coin, but they're doing projects to help. It's a publicly traded Canadian blockchain company, Blockchain Foundry. So Sebastian, a friend of mine, an old friend of mine, actually the guy who first started teaching me programming, my old roommate way back in the day, he's one of the founders of Blockchain Foundry. Yeah, if he's making an app like his liquidity pool, which you can find out about if you join the Facebook group, you know, he'll need to index that so that it can run fast. So that if he makes an app for it, right now there's not an app for it, but if he does make an app for it, a decentralized app, you'll need it to be performant. You'll need it to run fast. And what can give you as a developer the ability to make your apps run fast and perform better is this indexing protocol, the graph, which is why I find it's a necessary project for the advancements of this technology, for making this technology more user-friendly and better, because if it remains hard to use and so, we will never get to adoption. Any questions? I can pause for a moment, and then we'll move on and talk about the psychology of markets. And for those of you guys who have traded in other markets, you already know this stuff, but I want all of the brand new people who've never traded to learn a thing or two here. All right. This is the Wall Street cheat sheet. All markets are based on human psychology. They all move based on human psychology, whether it's the stock market, whether it's commodities markets, futures markets, precious metals markets, and also crypto markets. So, sorry guys, I get thirsty when I'm talking a lot. All right, so this was us in the bear market, okay? We went through all of these emotions. I think, so where I think we are today, and I'd also like to ask, I don't know if Helen's on the call yet, but I'd like to ask her where she thinks we are. I believe we're in the belief phase now, which is sort of halfway through this bull market. And then what happens is you do get to a euphoria where we all think we're geniuses, we're all going to be rich. And then we get a blow off top and we go into the next bear market and then it all starts again. But our next, our lows are, you know, let me just, I'll come back to this slide. This is the monthly chart. This was the last bull market in 2018. This is our current bull market, where we are today. And I remember when we were down here, I think here, March of 2018. So it's just about 3 years next month that I've been in. My friends Pip and Helen, who will be helping us answer questions. Pip's the one that got me into crypto. They came in somewhere around here on the rise up to the last bull market, okay? You see how it looks like a tiny little molehill compared to where we are now and where we're going. But back when we were down here, we thought we would never get up to these levels again, right? But you see, it does come a point where the party ends, right? And then when you're here, you never know. Is it just a normal 30% drawback and then we're going to see a continuation on? Or is it the end and we're going to have a 2-year bear market and have to wait for the next ride up? That's why it's important, guys, when you're in profits, to take profits along the way and not be too greedy and hold on for those big numbers, because we never really know when the top is coming. There's an indicator that I like that I'll show you later called the Bitcoin dominance, which kind of helps us understand when we're moving into alt season, which that indicator hit yesterday, and when we're going to see the end of the bull market. I'll talk about that a little later, but I just wanted you to see what happens and why it's important for us to understand the psychology of markets and where we are. I think we're in belief right now. So these are the emotions that everyone around us who are involved are going to feel. And I think we already passed optimism. This rally is real. We believe it's real now. We know it's real, but now is the time to get fully invested. That's why I feel like that's where we are now. But I don't think we're yet in the thrill phase where I will buy more on margin, got to tell everyone to buy. Maybe we are. I mean, I am telling you guys, but I'm also not telling you to buy because I'm warning you about there will be an end, right? You know, when I was telling you all to buy and posting on Facebook all the time was back here, okay? Because I knew for sure we were nowhere near here, right? So now that we're probably around here, I want y'all to be careful, okay? I want you to be careful, all right? So the next phase is thrill. I will buy more on margin. Got to tell everyone to buy. Euphoria. I'm a genius. We're all going to be rich. And then we get a blow off top. And then we get a dead cat bounce. Is after a blow off top, when the market rebounds a little bit, it's called a dead cat bounce. And when that happens, people are a little bit complacent and they think, oh, we just need to cool off for the next rally because they think, oh, it's one of our normal retracements inside a bull market because no one knows yet that the bull market's over. You can't know. So if you do get a dead cat bounce and then you see it come down again, another low, that's when you should probably take profits because that's the beginning of a bear market. And then we go into anxiety. Why am I getting margin calls? This dip is taking longer than expected. See here, they're not even sure. They're still not sure that the bull market's over, right? So I'm going to share this with you. I don't need to read through every one of these, but I'm going to share this as a PDF for everyone. So I'd like for you to all look at this and get familiar with the Wall Street cheat sheet because it will help you understand where we are in a market cycle. The market always goes in these 4-year cycles. Everything follows Bitcoin, the granddaddy, okay? And because Bitcoin has a halving where the supply that the block producers, the miners get rewarded with, gets cut in half every 4 years. This sort of dictates the fact that we have a 4-year cycle where we have bull markets, bear markets, and then bull markets again. And that's why I said when you invest, be prepared to be in for 3 to 4 years. This is not a get rich quick thing. It's a get rich slowly with a lot of hard work. That's what it is. All right, go ahead, Arpita.
What's the Facebook group that you're talking about? Let us know. People
Oh,
here.
yeah, I'll come to that slide later. All of the people who are friends with me on Facebook, I created an invite, and that's how they found out about this, and I posted about it. You need to become a friend with me on Facebook in order for me to invite you because it's a private group. But I can, if you're not friends with me on Facebook, send me a friend request. I'll add you and I'll invite you, okay?
Okay. And the second question is, how do you take the profits? Do you take in USD, take in Bitcoin or Ethereum? Does it depend on your goals, basically?
It depends on your goals. I'm going to tell you a little bit about the exit strategy, about what my plan is. There are some assets I have that are income generating assets, okay? Those ones I might not sell. I might just hold them and let them keep generating income. It's a whole lot better to be earning 12% a year on my holding of Polkadot, right? Rather than having to deal with tenants as a landlord in an apartment to get income generating assets, right? I just lock it up and let it earn money, and that's decentralized finance. There are so many ways in this future financial system to make money besides selling your coins, okay? You don't have to sell your coins. It's not about just buying it at a low price and selling at a high price. It is for those assets that are not income generating and those assets that that I don't feel are going to be adding enough value to really be sure things for the future. For those, my plan, those altcoins, I hold them as well. I have a exit strategy. I have an Excel sheet that I've made for myself, and it's so important for you all to have your own exit strategy for those assets that you do plan to sell off. Like EOS, for example, is one that I have, which I'm not going to keep. I'm not a huge fan of it, but I know it's going to do well, especially in China. So I'm going to I have a target set, $90, I think is my first jump off. I'm going to sell 10% of my EOS at $90, right? After that, I have to look at my Excel, but let's say the next one is 150. So I'm going to ladder out as my targets are hit, and I'm going to sell for USD. This is my personal plan, but the plan, we all need to make our own exit strategy. It depends on our goals, right? So I'm going to ladder out, and I'm going to be selling to USD, and then I'm going to reinvest and diversify that profit into other income generating assets like real estate or businesses. That's my plan, but we all need to have our own, okay? It's important.
We have one more question.
Mm-hmm.
If you're dollar cost averaging, then does your buy-in not change despite where we are in the chart? Do you change your sell off at all depending on the chart? I mean,
no, I don't do it that way. Some people may. And it'd be nice at the end, in the end, we're going to have the question and answer. It'd be nice to find out how also maybe Helen and Pip can say what their plan is as well. And it might help you guys get an idea for different plans, because these plans are very personal. My plan, like I said, is I've just got sell targets. Okay. I have ideas of where these things are going to go. And when those targets hit, I'm going to sell off percentages. All right, guys, so we'll do more of the questions at the end. I'm just going to try to get through this real quick, if that's all right. So I want you to go against the herd, okay? It's important. We have this fear and greed index, and I put the link here, which you'll all be getting. It's always good to check where we are. You want to go against the herd, because when it is an extreme greed like this, it means we're due for a pullback. And when I like to buy is when we're in the fear. You want to be buying when there's fear. When there's a huge dump and everyone thinks it's over, that's when you buy, right? Or you dollar cost average in. But at this point, also because we are in bull market rally, these pullbacks aren't guaranteed. So what I would do is set an amount that you feel like you can afford from your paycheck every time you get paid, and invest that amount, dollar cost average, into those good projects. Your dollar cost average, I'm going to show you a tool that you can use to see what your dollar through this deck, and go to the tools section. I'll show you that, and how what it means is, let's say I'm buying, I bought Cardano. I think I was buying, the lowest I got Cardano for was 5 cents, right? Today it's like, I don't know, 90 cents, right? But I didn't only buy at 5 cents. I might have bought some at 12 cents, right? Or 10 cents, So what it'll do is it'll tell you what your average buy-in price is. This tool called Crypto Compare, which I use for my portfolio tracking, and I'll show you it. I also use it for my tax, to keep track of my sales so that I can do my taxes. I'll show you that later, okay? So what I want you to know about this one, though, is always have a look at what the fear and greed index is every once in a while. Just kind of get a feeling for where we are. Remember, go against the herd. When it's an extreme greed, the chances are more likely of a pullback or a correction, okay? I've already showed you the Bitcoin monthly chart, so you see what happens. Nothing goes up forever is what I'm trying to let you know with this, okay? Now we have the new financial system, DeFi, and what I call banking 3.0. I haven't heard anyone else use that term, but I work for a banking 2.0 fintech software company, where we are helping the banks move into digital banking, helping them with digital banking transformations. But the next step is banking 3.0. And I'm very hopeful that we will be helping banks stay relevant by moving into 3.0 as well in the future. All right, so the legacy financial system. This is a slide I just made so we can do a comparison between the legacy financial system and the new financial system. The legacy financial system is centralized, so it's today's banks, the stock market, what you think of as the financial system if you're not in crypto, right? The yields are very low. Interest rates on savings accounts are like fractions of a percent. And so it can't even keep up with rising inflation rates due to the devaluation of the fiat currencies. Some countries are also imposing negative interest rates, okay? So it means if you're holding your money in a savings account in some places in Europe, they're going to take a piece off the top, right? So you're actually paying the bank to take your money and lend it out and make money off your money. Something's wrong with that. That's not fair. Also, banks participate in fractional reserve banking. So just because you've deposited your money into that bank, it doesn't mean they're holding it. They've actually lent it out, and not only one time. So if you've put $1,000 in savings account, they only have to keep a fraction of that on hand. Let's say they'll keep $100, and $900 they're going to lend out to other people, but not always just once. That same $900 through rehypothecation is when a lender takes collateral from an original loan and uses it as collateral for a new debt. So this new debt is now a derivative financial product based on the original debt agreement between you and the lender. So they may take your deposit and lend it out to multiple people, right? What's going to happen then if the whole thing comes crashing down? It's like a house of cards. You won't be able to get all your money out of the bank, you know. So, and it is a potential that we will have a collapse as we move into the new financial system. So, oops. All right, so the new financial system is decentralized. This is blockchain, Bitcoin, and cryptocurrencies. It has much higher yields. I stake my Polkadot on Kraken. I'll tell you about Kraken later. And I earn 12% per year. Now, if I was keeping my money in a savings account, I couldn't earn 12% per year. Not only am I earning 12% per year, my DOT is going up in value, right? So my asset, which I bought at $3, is $30 today, and I'm earning new ones. You know, I'm earning new ones just by staking it and helping participate in the proof of stake validation network by committing my value and participating in the network. This is all about community. These aren't companies behind this. These are open source communities behind these, for the most part. Some are companies, but for the most part in crypto, it is a community-driven endeavor. So you can get 12% by stocking DOT. Tezos, XTZ, earns 6%. You can also stake ADA, ETH, and many other income-generating assets and earn far more interest than you can get at a bank today. There's many aspects of decentralized finance. I'm just touching on two right now. Another one that's quite common is lending and borrowing. So it's peer-to-peer through the blockchain. I can be a lender or a borrower. We don't need a bank for that anymore, okay? You can actually borrow money for a house, for a mortgage right now, today, in decentralized finance if you want. That's there already, it works. And it's a large market and a very large growing market. So lending markets are one popular form of DeFi, which connects borrowers and lenders of cryptocurrencies. A popular platform, one of the early ones, is Compound, which allows users to borrow cryptocurrencies or offer their own loans, and then you can make money off of it. Now, I want to talk a little bit about security best practices. Be your own bank, hold your own private keys, all right? And what that just means is have your own wallet. Have your own wallet where you have the private key. You have the seed phrase for that. Only you have it, and you keep it somewhere safe. You do not write that on a computer. You do not store it on a computer. Write it down with pen and paper, and store it in multiple safe places. Okay. Do not keep all your crypto in the same place. If something, God forbid, happens and you have it all on one place and you lose it, let's say you lose that paper with your secret words, your private keys, you can't get access to it, right? So distribute it. Now, this is for people who have, you know, a few thousand in. If you're just starting, and you're just on Coinbase and you're using the Coinbase app and you have like less than $1,000 or something, it's okay. It's okay. But I think if you have a large amounts, and as we're seeing these assets increase in value, that $1,000 could become $10,000 by the time this bull market's over, you know. And you'll want to have it in a safer place. Use a hardware wallet. My favorite is the Trezor Model T, and I put a link in here, which I'm going to share with you guys on how you can get one. So if you, for the majority of your holdings, if you have a significant amount of value, you know, in the thousands, I would put it on a Trezor Model T. And the reason I say Trezor Model T is because it just supports more coins than the original Trezor 1. Do not click ads or links in emails, okay? The hackers will put a keylogger virus on your computer, and then they can track what you type in and get your passwords, like if you're trying to get on your MetaMask wallet or something. It opens you up to hacking. Always type them in by hand and double check that you typed it in right. Like if you, like when you Google, like if you Google Trezor even, and think you're going to get to the Trezor wallet site, there'll be a lot of ads in the search results that are fake ones. And instead of a IO, it might say Trezor.io is the real URL. It might say LO so that it looks like it's real. And these are phishing attempts. And this is how people lose their money. So be really careful of that, okay? And when you're sending crypto, let's say from an exchange to your wallet, or let's say you're buying Litecoin on Coinbase. If you live in America, you can't fund Kraken. Like in Europe, you can fund Kraken with a SEPA transfer. In America, we can't do that. So the easiest way, because there's a ACH Plaid with your banks in America, is we go on Coinbase and I'll buy Litecoin and then I'll send it over to Kraken and buy stuff on Kraken with that. So when you are sending that cryptocurrency from one exchange to another, always double check like the first 3 or 4 characters on the beginning and the last 3 or 4 on the beginning after you have pasted it. So you copy it from Kraken and you paste it in Coinbase's send form because you're about to send it. After you paste it, double check it's correct, because there's also a hack that has happened in the past where the contents of your computer's clipboard that stores your copy and paste memory has been changed by hackers, right? So always double check after you paste.
We have a bunch of questions, Alana.
Go ahead.
So the first one is, my fear is if we keep the money in crypto and stake it for the interest, what are the chances that someone who might want to shut the whole thing down and we lose our life savings?
Okay. It's good to always diversify. So I'm only staking parts, but when you say shut the whole thing down, you know what? I'm going to switch my view so that I can see and the chat. And I want to look at this question and see who it's from. Who wrote this question? Do you want to?
It's from Kiku.
It's from me, Alana. Hi.
Hi, Kiku. What do you mean when you say shut the whole thing down?
Well, like, let's say I don't know who is in charge of the regulatory commissions, whatever, but what if they suddenly make it illegal to have Bitcoin?
Well, it could happen, but it would never happen globally because the jurisdictions are all separate, okay? It did happen in China. Back when we had the crash after the last bull market, we had the crash, and it was because China outlawed it, but it's no longer outlawed there. The thing is, this is distributed. What happens in one country can affect the market for everybody, okay? But it will never be outlawed for everybody because every country in the world will never agree. So I don't think it's going to happen. But also to prevent yourself from any risk, it's always a good idea, Kiku, to be distributed, diversify. Do it only, like, I'm only staking 1% of my of this asset on Kraken, right? And then I stake other assets in different places and different blockchains. It's really good to just be diversified to protect yourself against that, okay?
But the crypto in general is not at risk.
Exactly. But always know that there is some risk, okay? And that's why we always say don't invest more than you can afford to lose. And what that means is different for all of us, okay? For me, what that meant was, because I really believe in this stuff, and so I've researched it. I spend a lot of time for the last 3 years, like 20 hours a week researching, and because I've been in IT and the beginning of the internet for a long time, I know it's the next progression. I know it's where we are going. I don't think you have to worry about it, Kiku, because I will show you some things once I get through with this presentation. And I'm sorry I'm going later. I hope you guys can hang out a bit longer so that we can get to the QA and get through the rest of it. I will show you some things that will help you understand that everybody's on board here, okay? There's a post on Twitter that I want to show you from the Federal Reserve all about the new decentralized finance. We are all getting ready to move into this financial system. It's not like the last bull market when there was more risk of that. We're all on board right now. I mean, last week, Elon Musk, the richest man in the world, invested $1.5 billion into Bitcoin. If there was a risk, that wouldn't be happening. It's pretty clear now that this is where we're moving, I think.
We have a couple more questions to Elena.
Yeah, you know what? Let me just quickly, I will come back to these guys.
Okay.
I know we have a lot of questions, but I'm going to go as long as I need to make sure they all get answered. I just want to finish touching on this PowerPoint deck because I feel like it's going to answer a lot of questions, and then we'll take those remaining questions if that's okay. All right, so here are some links that I'm going to provide because I'm going to give you all a PDF of this. So you can get your Trezor hardware wallet here. And the good thing about a hardware wallet is, okay, here's a Trezor hardware. This is the Trezor Model T. All right. What it does is I have to actually accept a transaction to be sent on here before it gets sent. So you can't be hacked if you have this. You cannot be hacked. Your funds cannot get stolen. It's not like just putting on, typing in a password or something on your computer. Someone would have to physically have access to this device to steal money from me. So if you have larger amounts of crypto, store them on a cold storage hardware wallet and keep your seed phrases and private keys in extremely safe locations, in multiple, fireproof, protect it. If you have a lot of wealth, you protect it well, okay? And diversify. Like I said before on the best practices, don't keep everything in the same place, okay? If you have a lot. The other link is tradingview.com. This is for charts. If you want to, it's a resource I want you to know about if you want to do charting. And you can track coins and where to buy them on CoinGecko.com or also CoinMarketCap.com. And someone asked earlier about how do we keep track of our dollar cost average and our portfolio and stuff for taxes. There's a few tools for that. I use CryptoCompare.com. Some people use Blockfolio. And I'm just putting these links in here for you guys. And I will show you CoinMarketCap. CoinGecko. The same thing. It's just I prefer this one. This shows us that the market cap today is 1.4 trillion. It will also, at a glance, you can always see what's it done in the last hour, what's it done in the last 24 hours, in the last 7 days. If you want to, if there's a coin you want to buy, but you don't know where to buy it, this is where you come, okay? Let's say I want to buy Cardano. You come here, you click on Cardano, and then you click on markets. And here you'll see the exchanges that sell it and the ones that have the most percent of the volume and the prices. If I was buying Cardano, I get mine on Kraken, right? Because Kraken is sort of it's the first exchange I ever used. It's an OG, original exchange. It's got a banking license. It's the first exchange to have a US banking license. It's actually a bank. And that's why I stake my assets on Kraken, because it is a regulated bank now, and I find it very secure. Another one that is very secure and regulated is Gemini. They don't have as many assets, but they have a lot of opportunities to stake and earn income off your assets, and they are also very trustworthy. And Coinbase is as well, and Coinbase for new people, which is why I have the link for that. Once you get to be a bit more advanced and you want to set limit orders instead of just market orders, then you'll want to use something like Kraken. And this is the same thing. It's CoinMarketCap. It's similar. It's what you can do on CoinMarketCap is you can use their earn and earn program, and you can do different tutorials and earn some crypto for it. You can also do that on Coinbase when you sign up on Coinbase. They've got great video tutorials that explain what are these projects with a little quiz at the end. And when you answer those questions, you're earning free crypto. And it'll just be a few dollars today, but by the end of this bull market, it could multiply by 10, right? The other thing I wanted to show you is this is what Kraken looks like, just so you know. This is the URL. Always make sure you don't go to a fake site. Just trying to go through these tools real quick. All right. Yeah, I think that's good for now. Okay, and for people who want to do training, I did this a couple years ago. I took a blockchain developer course at Ivan on Tech Academy. They're always updating their offerings. You don't have to be a developer. They also have for business users, like if you want to learn more about this growing industry, which will become huge in the years to come, just like the internet industry became huge. And those people who got jobs in the early days of the internet built great careers on it. So even if you don't have a lot of money to invest, you can really do very well. The highest paid, if you look at LinkedIn, the jobs going on LinkedIn, the highest paid jobs right now on LinkedIn, bar none, is for blockchain developers, because this is an emerging industry and there are not enough developers, okay? So you really have an advantage if you get in there. And you don't have to be a developer. If you're a lawyer, there's work for you. If you're an accountant, whatever your profession is, there will be a job for you in this huge new industry. And I also want to talk about the crypto Facebook group. Yeah, just let me know. A friend of mine who I told you about, who is a blockchain developer and has started a few companies and now has that liquidity pool. Some of you know him, Sebastian. He has created a nice Facebook group. And if you want to be invited, it's a place where, you know, we can help each other out, you know, and when the bear market does come, you hold on to each other through the hard times and we celebrate together in the good times. And so it's really important to have a community of friends who have a common interest. And you can ask your questions, right? Because I might not always be available. You can ask your questions when you belong to a group like that. Now, it's important that you all do your own research, okay? I just want to say the fact that you guys chose to spend your Saturday here and make the effort to start learning something that is complex shows that you, oh my goodness, my dogs, stop it, no bark, sorry, no bark. Shows that, Peppy, no bark, no bark. Sorry guys. Shows that you have what it takes to be on the right side of the largest transfer of wealth. You know, a lot of people, it's too hard box. I'm not even going to try. I'd rather watch Netflix. That's not the attitude that it takes to make life-changing money. You guys have the right attitude. Always keep learning every day. You know, for the last 3 years, I don't watch TV shows and Netflix. I only watch educational videos. I've spent like about 20 hours a week for the last 3 years learning. And it's a constantly changing industry, and it's important to keep learning. And I just want to give a disclaimer. I am not a financial advisor. This is not financial advice. This material is provided for educational purposes only. You know, when you get into crypto, you have to understand you could lose, right? So you need to put on your big boy and big girl pants. And if you make huge gains, that's down to you. You don't owe that to me. That's down to you. But if you make losses, that's down to you too, okay? Even though we can help each other out, we are responsible for our own decisions, okay? Now, we're moving into the Q&A, finally. So I have Q&A with Alana Pip and hopefully Helen too. I'm not sure she's here yet or not, but we're about to move into the Q&A, and I'm going to ask you to put your questions in the chat. But what I'd like to know first, because there is another surprise coming at the end, is if you are brand new to crypto, you do not even have any crypto at all, you don't have a wallet, and you do not even have an account on an exchange, brand new, I want you to put your name in the chat right now, because we're going to do something special for our absolute newbies. Now, if you're not brand new, I know you're, I mean, you cannot have even an account with any crypto on it, okay? Because some of you, I know you're not brand new. Okay, sorry, you're disqualified if you already have an account because it's cheating with what's coming next. You have to absolutely be brand new. You can't have an exchange account because I'm going to give y'all a task, and there's going to be a winner for the one who's first to do this task. And if you already have an account, you're probably cheating. And it's a gift of Ethereum, so no cheating. We're giving away crypto at the end to the newbies, all right? All right, all right. If you do have an account, okay, we're going to do it different. We're going to do it different. If you have a Coinbase account, that's okay. But the task, and I'm going to ask for everyone to be honest, okay? The task is you're going to have to create an Ethereum wallet address that's not on an account, okay? And I'm going to show you guys how to do that. So here we have on Google Chrome, there's a MetaMask, okay? And when you add it as a Chrome extension, you can create a wallet. You need to follow the best practices, okay? The best practices by writing down your seed words, create your wallet. You can connect it to a hardware wallet or not, but I know some of you don't have a hardware wallet. So you'll only be able to password protect it for now. So the contest for the end is the first brand newbie who creates a wallet, not an exchange-based, a wallet-based Ethereum address, and sends me a private message. If you're a Facebook friend or whatever, send me or you can send it in the chat too. You can say who you send it to privately. Send me a private message with your Ethereum wallet. I'm going to send $25 in Ethereum to that person, okay? So now we're going to move into the Q&A. And I've got, I want to introduce you guys. I said we're going to have a special guest. This is my friend Pip. She's the author of What the Fact, an A to Z of 201 blockchain terms in simple English, decoding the jargon of a disruptive industry by Pip. She's this is on Amazon, and she's gonna also, she's really nice. She's giving everyone who attended today a free copy of this book, a PDF version of it, because there's a lot of it's a whole new language, and it's going to help you learn the whole new language as you move into blockchain and crypto. So everybody who's here today is going to get a free copy courtesy of Pip. And Pip is here today to help me answer your questions. And I believe Helen might be here too. Helen, speak up if you're here as well. Helen might not. She had dinner guests, so we weren't quite sure if she would make it or not. But Pip and I have it handled. I'm going to go to the chat. I'm going to stop sharing this so that we can see everybody. And we're going to go to the chat, and Pip and I are going to answer all your questions. So let's see. What have we got? Okay, good. Denise is invited. Danelle is an admin for Church of the Flying Candles, the Facebook group, and she's invited you all. So thank you for that, Danielle. And have I missed any questions, or can we just type them up new so I don't have to scroll up, guys? Oh yeah, can I turn it over to Pip and let her give a little introduction? Pip, can you come on and say hi to everybody? Where's Pip? Are you mute?
Sorry, I couldn't unmute for a while.
Okay.
No, I realised there's actually quite a lot of new people, so I just wanted to quickly explain a bit more about the Trezor, because I think this is a really important aspect. This is your hardware wallet. Alana talked about two models. This is the Trezor Original, and this is the Trezor Model T. And basically, what's really, you can lose these. It actually doesn't matter. I mean, don't keep them safe. But what really, really matters is your password. Because if, for example, Alana was snooping around my house and she found my password, also called seed phrase or whatever, but we'll call it password for simplicity, she could actually get a tracer, put in my password, and access my cryptos. So just a very quick thing on the password. When you set up a tracer or a similar hardware wallet, like a Ledger is another popular one, your password is generally 12 or 24 words long. All these words come from something known as the BIP 39 word list. There are 2,048 words, and they're randomly generated when you set up your wallet. And they could be something like insect, harsh, ghost, gesture. They're a complete, mixture. But that's what you must write down really, really carefully. Just quickly, there's ways of keeping it safe. There's something.
Another thing is we should let them know that the best practice for you to do once you've written down all of those words is to, before you put any money on your wallet, destroy it and try to recreate it to make sure you wrote those words down correctly.
Yeah, absolutely. They do. A lot of them do checks after you've set it up, saying, could you add in the 4th word, the 7th word, the 8th word? But no, it's very, very good point. Absolutely double check it. There's also this, which is crypto tag, and each of these words that you have, the 2,048 words on the list, they have a corresponding number, 4 digits, and you can kind of encrypt them onto this metal crypto tag, which is fireproof, destruction proof. Keep it really safe. When you start making profits, it's actually worth getting a safe and keeping that really safe. And also there is, I mean, in Amsterdam, I know you can actually rent out a secure vault, like a bank vault, to store anything in. So that's also a possibility if you don't want to have a safe at home. But that is, I think, the singular most important thing about cryptos, because as you have heard, you are your own bank. You don't have a bank to store it in and let them worry about security. You do. And also, I'm hoping there are going to be a lot easier ways to solve this problem, because it's always a bit of a worry, losing them, having all, passwords stolen or whatever. So I just, wanted to say that. And finally, just very quickly, for newbies, it's very simple what you have to do. Buy a hardware wallet, register at an exchange, buy your crypto, transfer it to your wallet. You can keep it on the exchange, but it's not that safe necessarily. It's always best to keep it here. And just on another front, your crypto isn't stored in your wallet. A lot of people think it is because it's called a wallet. This, your crypto is on the blockchain. This allows you to access it.
Yeah.
So, and your password allows you to access it. If you lose this, you can set up another one using the same password and access your crypto on the blockchain. So that's it. Buy a hardware wallet, register at a crypto exchange, buy the crypto, transfer it to your wallet, done. When you want to sell it, transfer it from your wallet to the crypto exchange and sell it into Bitcoin, Ethereum, US dollars, euro. I have started transferring mine from, instead of transferring it to my bank, I've actually transferred it into gold and silver. there's a company called Vaultoro.com where you can trade Ethereum, Bitcoin, and Dash for silver and gold. And it's kind of, you know, it's pretty safe and it doesn't devalue like fiat. So that's another alternative to what Alana mentioned. And that's just the main points for newbies, I think. And it does get easier.
Yeah, it does. And thank you so much for that, Pip. Pip is the one that helped me learn in the beginning. She, you know, as a writer, she had written a lot of early tutorials last bull market. Things have changed, right? So, you know, everything has changed in the last 4 years. But the tutorials that she gave me that she wrote is what I used to learn 3 years ago when I got in. So thank you for that, Pip. So we have some questions. We have one here for Pip from Vibka. Vibka asks, what do you think about the Blocks app, Pip? BLOX.
I don't know.
We have a winner, and the winner is Arpita. The winner of the Ethereum is Arpita. Okay. I don't know the Blocks app either, Vibka. If it is one of those apps for earning rewards, there is, like, not only is there decentralized finance where everything is secured by a smart contract and you don't have to trust anyone, there are centralized finance places like, I'm thinking Blocks might be that, I'm not sure, but there's one called BlockFi, which I think if you're going to trust a centralized source for earning income on your crypto, I particularly am looking at BlockFi to earn on my Bitcoin. And I'm also looking at Gemini Exchange because it's highly regulated. These are, you want to go with like a US-based regulated company, not somewhere off in Asia or something that if your money's got like Gate.io or something, don't trust those. You want to stick with the US-based regulated exchanges and companies, because then if something goes wrong, you have legal recourse to get your money back. So if it's Blocks, if it's, I would say BlockFi or Gemini Exchange, I'm going to look at that starting next week. We have a question. Wendy is saying thank you. Everyone's thanking Pip for the book. And Wendy asked, was that called Crypto Tag, that metal thing that you showed us, Pip? What was the name of it? Can you maybe put the link in the chat for people? That metal, I don't have one of those, but I've seen them. And we have Kiku says, just a little clarification on the question of storing wealth. Does it make more sense to store money in USD or in crypto so it doesn't lose value if crypto is safe from being frozen or illegalized or dissolved? Also, name of Voltor or thing to exchange crypto for gold. Okay. Yeah. Pip's putting the links in there for, so Crypto Tag and the place where you can exchange crypto for gold. You know, if you're buying physical gold, though, a lot of the dealers accept Bitcoin, and you will get it cheaper if you pay in Bitcoin. So, like, I use JM Bullion, AppMax, and SD Bullion in America. When I lived in Europe, I used Silver Mountain Pentinel. So that's where I used to buy my metals when I lived in Amsterdam. Okay, Ellie asked, what do you think of Exodus and Coinbase? I use Coinbase, and I also have Exodus wallet. I think Exodus is great when you connect it with my Trezor Model T. It gives a really great interface. So you can use wallets like Exodus together with a hardware wallet just so you get a nicer interface. And some coins, they give you the ability to store those coins that you can't if you go to wallet.trezor.io. They don't have a software wallet that goes with that hardware wallet for some coins that you can get on Exodus. So yeah, that's a good wallet. Always better to have a hardware wallet. When you go to great wallets like Exodus and Atomic, if they have the option hardware, use hardware wallet, and you have a hardware wallet, always use that option. Danielle says, Alana and Pip, thank you very much. I'm super new to all of this and have created a trading diary plan, but am struggling as I don't know how to figure out if it's scrolling too fast. Everyone, please pause on the questions. hang on, I'm struggling as I don't know how to figure out if I should hold a crypto long-term or sell it when it's up. I'm trying to learn how to read charts, but I'm overwhelmed. I've been holding everything due to lack of knowledge. Is it possible to get chart information without actually knowing how to read a chart? Okay, guys, we can talk about charting. The thing is, the charts, they can help us, right? But if you want to know, let me show you, do I have my chart open? Learning technical analysis is not difficult. Learning how to read charts is not difficult. Buy red, sell green. Yeah. The thing is, you know what, I can give you my feeling, but I don't know exactly how this is going to play out. You know, I honestly feel like we have at least a few more months left of this bull market. I don't think it's going to end anytime soon, right? If I did, I wouldn't be doing this today. I feel like there's still time, but once we get that parabolic rise up, which you're already seeing in the charts, let me open a chart. And maybe Pip can come on and answer some of these questions while I'm in the chat, while I'm pulling up the chart.
Well, I'll just add what I do. I don't read charts with any great knowledge. I'm not a technical I can't even say it.
Yeah.
But what I do is I buy a crypto and I just wait. And if it gets to a certain point where I'm happy, I might take it all out if I need it, or I'll just maybe sell 5%. You know, I think, yeah, it's very simple, but the buy red, sell green mantra is quite good. You know, when things are down, that's a good time to buy them because they will go up probably if you've got a good coin. So then you can sell it and you've made a little bit. But I tend to hodl. I hold my crypto. I have one wallet where I have my favorite crypto, well, I have two favorites, which I know Alana also likes, Digibyte and Theta. And so with Digibyte, I have a wallet which I'm just holding for a few years. And then I have another smaller Digibyte wallet where I just might put in 500. And when it gets to 750, I might just take out 250, you know. So I think people have to come to their own way and also just trust your intuition a bit. If it's going up and up and up and, you know, just think, yeah, I've made enough, I can sell. Don't wait for it to get up here, you know.
A lot of people say when it's done a 10x, like let's say I've put $100 into Ethereum and that $100 has become $1,000. If it's done a 10x, if I take 10%, I've gotten my initial investment back, right? And now I'm just playing with the house's money.
Yeah.
And if it does another 10x, maybe I take another 10%, right? Or another 5x, right? Don't get greedy because it will come back down and we don't want to ride it all the way down like we did last time. Write it down and wait a couple of years. Some of you did that and you know we don't want to do that again, okay? So what have we got here? Any questions? And you would take it out in USD. That's what I would do, Danelle, because I live in America. Pip lives in Europe. So it's my goal would be to take out. Now I'm not taking everything out. Okay, like I said, I have those cash cow income generating assets which are giving me another income, right? So I don't want to sell them, right? But something like my EOS or some that I've got a lot of coins that when they go out, I'm going to sell. Yeah, this is a great question from Peter. I'm so glad Peter has asked this question because I meant to talk more about taxes and I didn't do it yet. So Peter asked, do you pay capital gains income tax upon selling similar to stock sales? Yes, you do, Peter, you do. And that's why you use a tracking app like Crypto Compare is what I use. And every time I sell, I make a note of what was the sale price, how many units, because every time you sell, it's a taxable event. Okay, so you want to keep track. Now, if you're holding an asset in America, I can only speak for how it works in America. Every jurisdiction is different. But in America, if you hold for a year or more, it's a long-term capital gain and you're taxed at a lesser rate than if you've held it for less than a year as a short-term capital gain. Now, if you've made any capital losses, let's say you get into a real, not a very good coin and you've lost, sometimes it's good to cut your losses at the end of the tax year and you can claim that capital loss to offset your capital gains. I'm not a tax professional. I use a CPA to do my taxes, a certified public accountant in America, a chartered accountant in Europe. I don't recommend people who have generated a lot of crypto wealth do their own taxes, because what good is it going to do you if you end up in jail for making a mistake, right? So I do recommend if you've made a lot of gains, just pay for the certified public accountant or chartered accountant to do your taxes for you the right way. But you're responsible for keeping track of your buy prices, number of units, date, and sell price for every transaction you do. We have a question from Mallory. What is your opinion on countries eventually creating their own digital country? I think it's going to happen, Mallory. It's already happening. We see in China with the Chinese digital yuan. That's probably going to be the first one that comes out, and we're going to see the U.S. digital dollar. I believe that, in the not too distant future, we're going to have the U.S. digital dollar in parallel with our current U.S. dollar. And let's say, for example, the stimulus checks that had to be distributed. What a palaver that was, sending checks to every person in America. Imagine if everyone just had, okay, download the U.S. government digital wallet, and we're going to send you the U.S. digital dollar, and it's all going to be distributed really quick and easy. So I think it's definitely where we're headed. But do you have any thoughts on that, Pip? U.S. central bank digital currencies, they're coming, right?
Sorry, I was busy replying to Ellie. I just want to add to Ellie. She asked about if I knew about crypto taxes, capital gain in the UK. I don't, because I'm in NL. But my best friend Edward, who's an accountant, told me for the first time he's noticed cryptos on the tax return forms. So they're onto it. But the question was about countries eventually creating their own digital currency. They will, as Alana said, the Chinese have started. But it's kind of the legacy banking system that's creating these digital currencies to replace fiat. Like, we'll have a digital euro probably, I think. But this kind of will make everything a bit centralized again and put it back in the hands of the bankers. So I'm hoping that, more people will be using these decentralized, distributed cryptocurrencies. On that note, there's a ton of cryptocurrencies. Some are specifically as currencies to be traded. Some are used also for smart contracts and have more usability. But I do think at some point there will be a sweep of all the cryptocurrencies, and probably not all of them will exist at some point. I'm not sure when. That's why it's good to invest in really good stuff. I mean, you'll see lots of things, particularly on Facebook, I think, saying, "Oh, this coin, it's amazing, it's really cheap, invest now." And it's maybe number 788 on the crypto coin market cap. Don't do it.
Stick to the top 100, guys. If it's on page 2, don't even buy it.
Yeah, and I mean, there is one that's doing really well called Dent, which everyone had sort of given up on, and I think it's number 288. I actually love it, Alana.
I know. I just think it's going to die. That's why I sold mine.
Yeah, it's gone. The thing is, it's come back to life and it's shot up in the last week.
Sell it, Pip. Sell it.
Not yet, but
Okay.
The thing I like about it is it's got a really good usability case. Basically, instead of having T-Mobile or Verizon on your phone and paying them whatever, you can actually use it as an app, and you can make global calls really cheaply. If you travel from one country to the other, which we're not doing at the moment, you don't have to pay these horrible roaming charges. So that's what I liked about it. I'm not recommending it. Please don't buy into it now, because I don't know if it will go up much more. But it was, you know, occasionally you can find these ones outside the top 100 and make some money. But maybe between Alana and I, we'll make a list of some top coins we might think will do well.
Yeah, and I can post that list. I've already put some in the deck that I'm going to give you. It's just 4 though, but there are many more that are great coins. And what we can do is post them in the invite on Facebook. And for those people who I invited from work, I'll post it in our DeFi and crypto Slack group at work. And
actually, if you don't mind, on that note, maybe it's worth saying a little bit more about Polkadot.
Oh, that's going to be great. If you guys missed the boat on Ethereum this bull run, Polkadot, the ticker is DOT, I believe is going to be the next Ethereum next bull run. And so now's the opportunity to get it while it's cheap. It's the one that I was talking about earlier that I earned 12% yield on just by staking it. So
yeah, absolutely. What I wanted to say about it is crypto, the whole crypto space is very complicated. You know, if you want to keep it really simple, you could just register at Kraken Exchange, transfer some money there, buy some Polkadot, and then literally in 2 clicks, you can stake it. And then you'll be earning 12% interest a year. And that's actually, if you have 100 dots, that's 12 coins a year. At the moment, I think they're about 25.
Yeah, it's about 25. It's heading towards
it will go up. It will go up. So, but that way you don't have to worry about hardware wallets. You don't have to worry about trading too much at exchanges. So that's a really good first step, I think, to get people, you know, to get involved, you know. But obviously,
I stake 100% of my DOT. They're asking about the staking of the DOT. I do stake all of my DOT.
Yeah, me
absolutely. I want those good rewards. And we've got Kiku asking, is staking on Binance in the EU as good as Kraken staking? If I were you, I would stake it on Kraken. Okay, I think Binance is good. I mean, they have been hacked, and when they did, they made good by giving people their money back. However, Kraken has never been hacked. Kraken is the OG exchange started by Bitcoin OGs who were in there for the right reason. You know, we're making this world more decentralized and more fair, and they have the right principles, and they also have a US banking license and are regulated. So Kraken, if I'm going to trust storing my money on any exchange, Kraken is the one I trust.
Yeah, and also I tried to stake IOST on Binance a couple of days ago, and it's already full. No more people can stake it, which, you know, so yeah, I think for all the reasons Alana said, definitely Kraken is as safe as you can be.
Yeah, that's right. So stake on Kraken, guys. You can stake your Tezos on Kraken as well. You can stake Ethereum on Kraken. Now, if you do stake your Ethereum, like I said earlier, we are moving from Ethereum 1.0 proof of work, what I'm mining over here on this gaming computer, we're moving to Ethereum 2.0 proof of stake. It's going to take a couple of years. It's a huge software project, okay? It's going to take a couple of years to finish. So what they're doing is, if you do stake your Ethereum on Kraken, it's converted from ETH 1.0 to ETH 2.0, and you have to lock it in until the entire ETH 2.0 is finished launching, which could be up to 2 years, and even your rewards are locked. So don't do that with any Ethereum that you're going to need in the next 2 years, okay? So only if you're not going to need this Ethereum in the next 2 years and you're thinking long-term, would I stake that on Kraken, okay? Any other questions, guys? How much, Danielle asked, this is based on trading volume, correct? How much is bought and sold? Hang on, I have to scroll up. I've missed a few questions. Sorry, guys. I'm going to try to scroll up and get them. By the way, we've got Kiku saying, by the way, the exchange should be able to create a report of your trades for tax purposes. Yeah, okay, that is true, Kiku, but sometimes, like if you're on Coinbase and Kraken, you will be able to get a report of your trades for tax purposes. But there are all these decentralized exchanges that many of us are using today in DeFi, like Uniswap. I just want to share my screen and show you some of these things. For those, you really need to keep track yourself. So it's just a good practice to keep track yourself. And then those auditing reports, if you get audited, you can use those reports. So let me just show you some of these decentralized exchange. This is more of an advanced topic. So I'm not gonna go into too depth, but I just wanna show you, let's see, we have here, this is Zapper.fi. It's a dashboard for all of your decentralized finance, okay? And then we have here, Uniswap is like the most popular decentralized exchange. So it's uniswap.org. And here you can swap one token for another. It's all ERC20 tokens, which are tokens on the Ethereum ecosystem. So you can use Uniswap and you connect it. You connect Uniswap to your MetaMask wallet, and that's how you trade. MetaMask is for all ERC20 tokens, Ethereum and all tokens on the ERC20 on the Ethereum network, which is about 50% of all the cryptos are on the Ethereum network. That's why Ethereum is a no-brainer, guys. Like if I was gonna buy now and I didn't have any holdings, for me personally, okay, I know, you know, but for me personally, I go half into Ethereum and then spread the rest among the other good projects. I go heavy into Ethereum because to hedge, because it's to me, it's a no-brainer safe bet, okay? It's safe as Bitcoin in my opinion. All right, do we have any other questions? These gas fees that are coming, that problem is being solved. Okay, but right now we're still on a 3.1. Oh wait, what fees turned up?
Terrible feedback.
I can't hear you.
Suddenly there was terrible feedback. We couldn't hear anything. It seems to be when you shared your screen, perhaps.
I can't hear anymore, guys. Have you lost audio?
No, Alana, when you presented, it was really hard to hear. Something happened.
Yeah.
Okay, is it better now?
Yeah, but you're not. Yeah, but you're not presenting. You're not presenting.
Okay, I'm sorry, guys. You know what? What I will do is I will send you those links of the things I wanted to show you, uniswap.org and Zapper. Something's gone wrong with our meeting, and I don't want to lose audio. So what I'll do is just tell you about them and send you the links later. And we'll just get back to the questions. If someone wants to know the name of the Facebook group, it's the Church of the Flying Candles, and Danielle can give you an invite. She'll post another invite in the link in the chat. Michael says, Kraken is crazy hard to fund with USD, though. It is true. When you live in America, it's hard to fund Kraken with USD because you have to send a wire. When you live in Europe, you can fund your Kraken account with a SEPA payment, which is super easy. And when I started, I was living in Europe and doing it that way. So now if I want to go to Kraken, what I do is I have my favorite coin for like that I only use for this purpose because it has a really great, it's Litecoin, it's very liquid, and it's very fast, okay? So what I do in America to get around the funding my Kraken problem is I go to Coinbase, which is easy to fund in America, right? And I buy Litecoin. And I send the Litecoin to Kraken, and then I sell it for USD so I can do my accounting. And then I buy my DOT or my Cardano, ADA. Those are the two coins that I can't get on Coinbase that I love. And I buy them on Kraken. And that's DOT and ADA. That's Polkadot, which Pip was talking about, and Cardano.
I just wanted to add, you can also I didn't realize, the Kraken issue if you're in the US, but it's also possible to buy dots somewhere else. Coinbase, I imagine. I don't use.
Not yet. In America, we have to do it this way. Yeah.
Binance, can you buy it on
It
Binance?
depends on what state you're in.
Okay, well,
I'm not allowed on Binance US.
just as an example, if you can buy Polkadot at any other exchange apart from Kraken, you can just do that and transfer it to Kraken, and make sure you transfer it on the Polkadot network, because especially with Binance, they give you a choice of 4 networks. It's a bit confusing. So if you can't actually get into Kraken, you can buy Polkadot elsewhere, just transfer it into Kraken. But you obviously have to be registered there.
All right, yeah, I see Wendy's having an expat problem. I remember those expat problems. She's been having really big trouble getting through the recent Coinbase KYC changes because she lives in Greece, and as a Dutch national, they're not accepting her utility bills as proof of address. Well, I think anything. Can you get on Kraken, Wendy? Can you get on Kraken? If I was living in Europe, to be honest, guys, I didn't use Coinbase when I lived in Europe. I only used Kraken. The only reason I use Coinbase now is because it's what makes it easy for Americans.
If you're in Europe, there's a really easy exchange called lightbit.eu, which I'll write down here now. It's super simple to buy cryptos. The only thing is when you go to withdraw them, they do take a huge chunk. So it's probably better to go to another exchange and swap them there. But it's so easy. And also with Kraken, they have a mobile app on your phone. You can actually buy any cryptos with your credit card if you're in Europe. Everything's getting easier.
Yeah, it is getting easier. In the last bull market, 4 years ago, the only way for you to buy these coins, because there weren't a lot of trading pairs, the only way for you to buy would be to buy Bitcoin and then buy these coins. But now there's so many pairs with your euro or your Great British Pound or your US dollar. Everything's become so much easier.
I just want to say to Danielle, I don't actually have any Ethereum. I only use it if I'm on an exchange to make swaps. So Alana will know more about that.
Yeah, and you need Ethereum for the gas fees. And with that gas fee thing that Danielle was asking about, it is a problem. And that's one thing that these when we get to Ethereum 2.0 in the future, it will get better. But right now, because there's so much DeFi, billions and billions and billions happening, for those little small traders like us, retail investors, we end up having to pay these really high gas fees. I have noticed if you really must do Ethereum transactions right now, and I hate it because I have a lot of Ethereum things that I'd like to be selling right now, but I don't want to sell a small holding on an Ethereum token and pay like $150 gas fee to do it, you know? So I'm just holding them for now until this problem gets resolved. You can use a second layer protocol called Loopring, which I'm investigating right now, to eliminate your fees because that's settled off chain. So you can do your transaction on a second layer protocol, okay? And then one batch transaction at the end. But I'm only just now learning how to do this, Danielle, but as I learn, I will share the information with you. For now, what I'm doing is just sitting on those Ethereum coins. And another thing you can do, and I know this is annoying, is wake up at between 2 and 3 in the morning, and then the gas prices are cheaper. You tried it already? Okay. Yeah, and that's why I'm not currently buying things on Uniswap that I would like to buy. Like I want to buy more API 3. I'm not buying more. I'm just sitting with what I have. And that's why right now, just buying on the centralized exchanges is going to be cheaper. Buying on Coinbase and buying on Kraken, Binance, that's going to be cheaper right now. Even though just because we're still a developing technology, and that's a problem that we haven't completely solved yet. So I think we've got a lot of the questions answered. I'm happy to keep going if you are, but I do need a quick bio break. If Pip could answer any questions until I get back, it'll just be a second, okay?
Bio break. I haven't heard that before. I'm seeing one. What is the gas fee? Did Alana already answer that? Yeah, it's kind of annoying. If you want to move, transfer crypto from one place to another, you have to pay a little fee, and normally it's quite small. But it seems to have gone up a lot with the prices. Some, like, it depends on the coin. Digibyte has really, really low transaction fees, less than, I mean, it could, I don't know, maybe, I don't know, but I can't give you an exact number, but it's just, you wouldn't even notice it. Maybe even less than a penny if you want to move like 1,000 or 5,000. It's very, very low. Bitcoin's very high. I actually wanted to move some Bitcoin to Vaultoro to buy gold and silver, and the fee was going to be about £30, and I think I had about 800 pounds, so I thought that was a bit high. So I swapped. I was on an exchange, so I swapped it for I think Dash, and it was a really minimal fee to send it. So the gas fee is kind of yeah, what you put in the blockchain to send it, I suppose.
It's all the processing fees on the Ethereum blockchain, right, Pip?
Well, it's what the miners earn.
Yeah.
You know, it's how the miners make money.
But it's recently gone up to extraordinary prices. And if you purchase a token that runs on that Ethereum blockchain, they call them ERC20s.
Oh yeah.
And let's say your investment is like $750. You paid $750 for some tokens, and they grow in value, and you try to swap them. It eats up so much of your profit that you're sort of stuck. And they don't, if you go to swap, they don't take that gas fee out of your tokens. You have to have enough Ethereum in MetaMask where you do the swapping. You've got to have that extra 200 in Ethereum sitting in MetaMask, or you can't do the swap. You're stuck there. So you've got to have your original investment that's grown plus an extra 200 in ETH sitting there in MetaMask. And a few of us actually, we didn't understand this or know what was happening, and we got stuck because we didn't have the ETH sitting there.
No.
Yeah.
Yeah, no, I mean, I've experienced the same with my Ether wallet, Mu, which is where I have a few ERC20 tokens. I have to say, they're ones that I haven't moved, but I know that I have to have a certain amount of Ethereum, and if I don't, I can't move them. So I'd have to move the Ethereum into the wallet before I can move everything out. That's why I love Digibyte, which is a completely different blockchain with, you know, which you can just flash things around. I could send something to Alana in, you know, 5 seconds, you know, in the States from Amsterdam, and super, super, super cheap.
Yeah, Digibyte is super fast. It's a great project, and it's still cheap. So that is one that I would buy, guys. And I think Pip and I both love Digibyte. The symbol is DGB. Where can they buy it?
Binance, Lightbit. I mean, it's a shame it's not.
Binance would be the one that's the biggest one for you guys to buy it on. Yeah.
Yeah, it's not on all the exchanges yet, but I have a feeling it will be.
I think it'll come on Coinbase soon. It's one of the older UTXO blockchains. It has 5 mining algorithms. It's super secure. It's decentralized. I really like the guy who started it, Jared Tate. I think he's just a really great guy, and it's a great project.
And
They're
also
in Europe, they're tracking COVID cases and stuff, aren't they?
There's also rumors that Digibyte might be doing something with the US government at some point.
Yeah. And it's already with the EU government. It's already helping to track cases of COVID, right? I think they're already using it for that.
I don't think they are. I think they were chosen.
So they're starting to do this, right? Yeah.
No, I have a feeling that they refused because they're quite an ethical blockchain.
They didn't want to track people. All right. So let's read this. I gave up and I'm hodling. I'm trying to read this. I gave up and I hodl with what I have on ERC20. Oh, the gas fees, right? Right, Danielle?
Yeah, we talked about all that.
All right. And Grits Gal down here in Louisiana is making a joke about the gas, the name of the gas. Okay. Ellie, Alana, and Pip, I must, hang on. Everyone hold the questions. Don't hit enter. Type it, but don't hit enter until I can read it. I must go now. Okay. Okay. Nice that you joined us, Ellie. I'll be posting the book in the PDF from the presentation in the group on the invite, so you can all read it later. The book from Pip will be a gift for everyone. Danielle says it's difficult to know what to buy, like 100 different coins and tokens. It is, but you know what? I'm going to put more of my list of what my favorites are. Do your research, read up on these projects, check the GitHub repository. That's where, as developers, where we check our code into, and it's all public. You can see, is it active? Is it a dead project? Try to keep to the projects on the first page of CoinMarketCap, the top 100 per market cap, because these are less likely to fail, okay? So for beginners, I think, in fact, I would say stick to like the first 50, you know, the top 50 for the beginners. But there are some gems underneath there as well, okay? Kiku says, can you please explain DeFi like to a first grader? Okay, sure. And she wants to know, she didn't understand the terms that I used in the comment originally, and she doesn't understand what a swap or pool. And don't you pay taxes twice if you swap for liquidity? Every time you swap, it is a sell, okay? So you do need to keep track of that. So if I'm swapping Ethereum for API 3 or the graph on a decentralized exchange, swapping one coin for another, you do need to keep track. And that's why it's kind of hard for accounting. So you know what I do, because my accounting has to be in US dollars. So just to make my accounting easier, and if I'm ever audited, I will swap twice, and I will trade twice. So just because there's a trading pair of Ethereum to the graph, I will probably still go from Ethereum to a stable coin that's pegged to the US dollar, like USDC. And then that way I can report it as a USD transaction, and then the next one is a USD buy. So I will go through stable coins just in case the time comes that I'm ever audited, and just to keep the math easier for myself, because I still have to do my accounting in US dollars, right? And for you in Europe, you would do the euro, right? Same thing. I don't know if we have any stable coins in euro though. Not yet. All right, so, and she asked about liquidity pools. All right, I am, I haven't done any investing in liquidity pools myself yet, but I am thinking of investing in Sebastian's. I know you know Sebastian Kiku. He has posted it on the Facebook group. He's started his own liquidity pool, and you can earn rewards by contributing your crypto there, locking it up, and you can earn rewards. But to be honest, is Helen here in the room? Because she's much more of a experienced in decentralized finance than I am. I'm learning more and more about it as well. I have not participated in DeFi as much because there can be risk, right? Like, let's say for there can be risk, and until I'm sure that the risk is low, like let's say, then I'm not going to actually start taking part. I don't want the risk. So, for example, one risk might be I've taken a loan, all right? I'm participating in decentralized finance in the lending world. I'm taking a loan, maybe Aave, AAVE is the coin, and I've gone on to Aave Lend, and I've taken out a loan. And by doing so, I've put up, let's say I've put up 10 Ethereum as a collateral against my loan. Maybe it's a home loan I'm taking out, right? So I'm buying a house, but I don't want to cash out because when I cash out, it's a taxable event. So instead, I'm taking a loan. Borrowing against your crypto is not a taxable event, right? So you can use this decentralized finance world without taking all your money out. You can't. The only way to make money is not by selling your coins. You can keep them in there if it's advantageous, right? But let's say we go into a bear market again and Ethereum drops from what it is today, about $1,800 to, let's say it drops all the way to 1,000. I don't have enough collateral left to secure that decentralized finance loan. So then I need to put up some more money, right? So those are some things that I'm still trying to work out, but this is the newest thing. It's the direction we're heading. Decentralized finance is the future. Right now, it's all happening on the Ethereum network. And as you have all heard today, there's problems with that, with the gas fees. Every time you send a transaction, oh man, it's a pain. It is getting better, but today it's the best we've got. And for this bull market, Ethereum is where it's all happening. However, in the next bull market, in the future, the blockchains that are challenging Ethereum are Polkadot, which we talked about, DOT, Cardano, ADA, and I believe Tezos, XTZ, are the ones that are also going to all have decentralized finance working on those platforms as well. In the next bull run, we'll have ETH 2.0. The gas fees will be much cheaper. It's an emerging market, and that's where we are today. Did that answer your question, Kiku? Okay, cool.
Yes,
All right.
yes, thank you very much. I really appreciate it.
All right. We have Casey. Casey asked, one weird thing I noticed when transferring from Coinbase to Kraken is sometimes I'll say transfer 100. Oh, yeah. Yeah, that's because of slippage. So she says she'll transfer 100, and then by the time it gets there, it shows 90s and no fees. I never look at the USD amount when I'm sending coins. On Coinbase, there's a little arrow up, arrow down thing where you can switch from the USD value, and it will show you, like if you're sending Litecoin or XLM or whatever, it'll show you the actual currency value. If I'm sending 10 Litecoin, it's always 10 Litecoin, regardless of what the USD price is. So when I'm sending currencies, I don't even look at the USD price, because that 10 Litecoin is always going to be 10 Litecoin, but in a second, the price could have changed and the 100 becomes 90 because the price dropped, right? So I always deal with just the cryptocurrency value that I'm transacting. I don't even look at the USD value. Okay, do we have any other questions? Get them in now. I'm gonna be posting your gifts from Pip, the lovely book from Pip, on the Facebook event for everybody. And if you invited someone who's not on my Facebook, just share it with them. And for my colleagues who are not on my Facebook, I'll post it in the invitation that I sent to you guys. And I think that's it. I have recorded this session. Thank you so much, Pip, for helping me out and sharing your book with everybody. And I will post this recording for those who missed it and for you guys to rewatch. And if you have any questions, please join the Church of the Flying Candles. Danielle is an admin on there. She can post the link one more time in the chat, the invitation. And it's a place where you can go and ask your questions if you get stuck. You always have access to a community. And the only thing that I ask you guys is, once you get a little bit better at it, help somebody else out, okay? We are a community, okay? All right, thanks everybody. Enjoy.
Thank you so much. Thank you.
Enjoy the rest
Thank
of your
you so much.
Thank you so
Bye.
much.
Brilliant.
Oh,
Thank you.
How do you leave?
I just close the tab.
Just close the tab.